So you want to learn about the new coronavirus pandemic crisis? Well, you have come to the right place. So hi everyone, my name is Marcel and I'm a student of economics. So today we're going to talk about the coronavirus and let's just get straight into it. Here you're going to have all the timestamps of different parts of the video and you can basically just skip to them if you want. So what was the situation leading up to the crisis? In 2008, the situation was in general much better than the timing before the 2020 crisis. Basically, the only major crash that we had in the time leading up to 2008 was the 2001 dot-com bubble crash, but then from 2001 to 2007 we had a very big expansion in our economy. The situation before the 2020 pandemic crisis was in general much worse than before the 2008 financial crash. Just example, the debt. The corporate debt was twice as big as it was before the 2008, and in general the debt from different states was 253 trillion, which presents 322% of the world's GDP. Besides this, there were also other indicators which indicated a crash in 2020, such as the purchasing manager indexes. They indicated a crisis in countries like Italy, Spain and South Africa, and also we had the euro debt crisis in 2010. We also had the Brexit and of course the trade wars between the USA and China. Besides this, the International Institute of Finance also predicted a decline of almost 10% in GDP in the United States and about 15% in Europe. So next up are the reasons for the occurrence. So here we can basically mostly talk about the exogenous and the endogenous reasons for occurrence. So when we look at the financial system, we can basically have a crisis from inside the system, so an endogenous crisis. This is basically what happened in the 2008 financial crisis, and on the other hand, if something comes from outside the system, we also have an exogenous crisis, so with the coronavirus pandemic. So the 2008 financial crisis was an endogenous crisis because it came directly from a collapse within the financial system. The bonds faulted, there was no liquidity, and that then led to a crisis. With the coronavirus pandemic, it was exogenous crisis because due to the coronavirus, we had to prevent the spread of the virus, so we implemented different isolation measures which prevented people to buy different goods and also prevented different companies to produce and sell their goods. Therefore, the economy was not operating as it was supposed to, and that led to another crisis. So one comes from inside the system, so the 2008 financial crisis, and the other comes from outside the system, so the 2020 pandemic crisis. So next up is the impact on the market supply and demand. So the 2008 financial crisis was a financial crisis and it was caused by the lack of liquidity. This basically means that the biggest impact that it had on the market was on the demand side. There was no liquidity, so people could not spend their money, and therefore, if you can imagine the supply and demand graph, the demand basically went down. But today, with the 2020 pandemic crisis, we have a different situation because we don't have only the lack of demand but also the lack of supply. The lack of supply is caused by the fact that different companies cannot produce, different services like tourism cannot offer their services because we have to be in the lockdown, etc. And on the other hand, the demand is basically caused like as if in any other crisis, meaning that people are scared because there is another crisis, so they are not spending as much. Maybe they also lost their jobs, so they don't have as much money as before, therefore they're not spending as much. So here with the coronavirus crisis, we have both the lack of supply and also the lack of demand. So with the 2020 coronavirus crisis, we also have like a special situation where the demand for essential goods can actually be higher than before. This combined with the decreasing supply could actually mean that the prices for like different essential goods could become much higher. So why would people increase the demand for essential goods? That is basically because of different lockdowns, people are scared and they want to stock up on different essential stuff. Therefore, the demand could be higher. So, impact on different sectors. So here's also a big difference between both of the crises, because the 2008 financial crisis had a big impact, but this impact was more or less equally divided between all of the sectors. Whilst on the other side, with the 2020 coronavirus crisis, we have a much greater impact on some sectors, so stuff like tourism, airplane industry, etc. And these sectors are really hurt very badly. But on the other hand, we also can have sectors that also expand, so stuff like video conferences, Zoom, and other platforms that make different long-range options available. So both the 2008 financial crisis and the 2020 pandemic crisis also had a very big impact on the stock market. In the 4 weeks from mid-February to mid-March in 2020, the stock markets of the G7 countries fell by about 33%, while in the first 4 weeks of the 2008 financial crisis, they fell by only about 19%. Also, the biggest decline in 2008 was at 55%, but today we're still uncertain because the pandemic is still going on. But up to this point, the coronavirus pandemic has caused the biggest decline in the history of the stock market. It also must be noted that markets have gained significantly in April and May, but today there's still a lot of uncertainty because the number of cases of the coronavirus have been increasingly in the past couple of days. So there is a danger of the second wave, which would again cause a big decline. So how do we basically solve each crisis? So as mentioned before, the 2008 crisis was mostly a liquidity crisis, which basically means that there was a lack of money. Therefore, the 2008 crisis was solved mostly with the help of monetary policy. Monetary policy basically is controlled by banks, and it can make the money cheaper or more expensive. In 2008 there were different quantitative easings. There was also the troubled assets relief program in the States, and also the monetary policy was much greater than it is today. But today, with the pandemic crisis, there was the problem of the companies not being able to produce, and also the lack of supply, etc. Therefore, it should be solved mostly with fiscal policies. That is also shown in the fact that the fiscal packages by the G7 countries are about 4.4 times as big as they were in 2008. These fiscal packages are basically aimed directly at helping different companies and in general making their position the most similar to the position that they were before the whole pandemic, lockdown, etc. 2008 financial crisis was solved mostly with monetary policy, with also a bit of fiscal. But today, fiscal has the bigger impact and also is combined with a bit of monetary policy. So what is going to be the aftermath of the crisis? So the 2008 financial crisis on average caused about 750,000 job losses each month, for a total of over 8.7 million unemployed in the States. The biggest contraction in the GDP was at 4.2%, and the unemployment peaked at 10%. So we can definitely not say what is going to be the aftermath of the coronavirus crisis, but up to now, just for example, in the week ending on March 21st, 3.3 million Americans applied for unemployment, and then the following week 6.6 million Americans applied for unemployment, which was the biggest application for unemployment in 1 week in the history. It is also uncertain how big the contraction of GDP is going to be, but there were different calculations that say that if about 20% of the economy shuts down for about 2 months, so basically a lockdown, that would basically lead to a contraction of about 3% of GDP. There's still a lot of uncertainty with the second wave, meaning that we had the first wave in March and April, and our economy has quite significantly improved from that point, but if another wave comes, there will still have to be another lockdown, which will lead to another potential contraction of GDP, etc. But there is also a big difference between the 2008 financial crisis and the 2020 pandemic crisis in the different ways of mitigation. The 2008 financial crisis, basically it happened and we had to deal with it. But with the 2020 crisis it is a bit different, because it depends very heavily on the fact of how strong a country's health system is. For example, if a country has a very strong health system, it might implement less containment measures, because it can cope with more infections because it has a good health system. On the other hand, if a country has a very bad health system, that would mean that they would have to implement very heavy restriction measures so that they wouldn't have as much infections. Therefore, their health system would not overflow, and that would basically mean that a lot of people would die. So that is also a big and important distinction, which basically means that you can either have a lot of people infected and potentially also a lot of them die, but the impact of the economy is not going to be as big as it would be if you would implement very heavy restrictions, which means that companies would not be able to produce, people would not be able to consume, but your health system would not be overcrowded. Therefore, you would also have a lot less deaths. So if you have enjoyed this video, please consider giving it a like and subscribe to my channel. I'm going to upload weekly videos on topics such as economics, business, different book reviews, etc. And if you have any video suggestions, questions and whatnot, please leave them down in the comments, and that would be all. Thank you guys all for watching, and see you in the next video.